Wall Street is dead wrong about this stock. One company just connected regular smartphones directly to satellites. No special hardware. The implications for investors are massive. Here's the problem nobody talks about. 4 billion people live in areas with zero cellular coverage. Not weak signal. Zero. And the traditional solution requires building towers that cost millions of dollars each in places where there's no economic incentive to build them. AST SpaceMobile looked at this problem and said, what if we just put the cell tower in space? But here's what makes them different from every other satellite company. They're not asking you to buy special equipment. They're not selling expensive terminals. They want to connect directly to the phone already in your pocket. The same device you use every day. And this is where it gets interesting. Because if they can actually pull this off, they're not competing with Starlink. They're not competing with traditional carriers. They're creating an entirely new category. But that's not even the strangest part of this story. The technology behind ASTS isn't theoretical. In September 2023, they launched their first commercial satellite called Bluebird 1. And within weeks, they made history. The first ever voice call using a standard unmodified smartphone connected directly to a satellite in space. No special hardware. A regular 5G phone. The call quality was clear enough to have a normal conversation. But here's what they don't tell you in the press releases. The satellite they used has an antenna the size of a basketball court. 64 square meters of unfoldable array that turns into essentially a cell tower orbiting Earth. This isn't some miniature CubeSat. This is one of the largest commercial satellite structures ever deployed. And this is where it gets interesting. Because the physics actually work. The math checks out. But physics and profitability are two very different things. If this is already making sense, drop a like so I know to keep going deeper. Let's talk about what Wall Street keeps getting wrong. Most analysts are valuing ASTS like a traditional telecom company. They're looking at subscriber projections, average revenue per user, and comparing it to existing satellite phone providers. But here's the thing. Those frameworks don't apply here. AST SpaceMobile isn't selling anything directly to consumers. They're not building a customer service team. They're not opening retail stores. Their entire business model is partnerships with existing mobile carriers. AT&T, Verizon, Vodafone, Rakuten. These aren't just handshake agreements. These are commercial contracts worth billions of dollars in potential revenue. The carriers pay AST SpaceMobile for access to their network. The carriers then offer the service to their existing customers. The data shows something surprising. AST doesn't need to convince 4 billion people to sign up. They need to convince a handful of telecom executives that the technology delivers. And they've already done that. Now here's where the bears have a point. AST SpaceMobile is burning through cash like a rocket burns fuel. Their operating expenses last quarter exceeded $100 million. And they're nowhere close to generating meaningful revenue yet. The company has had to raise capital multiple times through stock offerings, which dilutes existing shareholders. This is the classic pre-revenue growth stock dilemma. The technology might be revolutionary, but if they run out of money before reaching scale, none of it matters. But here's what they don't tell you. The capital markets are actually working in their favor right now. Their last raise was oversubscribed. Institutional investors aren't running away. They're accumulating. The short interest data tells an interesting story. While retail traders debate on Reddit, institutions are quietly building positions. Vanguard, BlackRock, names you recognize. The real opportunity is this. The smart money doesn't pile into companies they expect to fail. they pile into companies trading at a discount to their potential. But, everything I just told you? That's just the setup. Here's where the real story begins. In March 2024, the FCC granted AST SpaceMobile something unprecedented. Full commercial authorization to operate in the United States. This wasn't some minor regulatory checkbox. This was the federal government essentially saying yes, you can connect regular phones to satellites in American airspace. The stock moved over 300% in the months following that approval. But that's not even the biggest catalyst coming. The company is scheduled to launch 5 more Bluebird satellites by the end of 2025. 5 satellites doesn't sound like much until you understand the coverage math. Each satellite can provide service to an area roughly the size of Texas. 5 satellites positioned correctly could cover most of the continental United States. If you want to see how this ends, make sure you're subscribed. And this is how you profit from it. Understanding the deployment timeline is everything for ASTS investors. The math doesn't lie. Let's break down the revenue potential that has Wall Street so divided. AT&T alone has over 70 million post-paid subscribers. Their agreement with AST SpaceMobile could generate between $5 and $10 per subscriber per month for satellite connectivity. Even if only 20% of AT&T customers opt in, that's $140 million monthly from one carrier. Now multiply that across Vodafone's 300 million customers. Rakuten's mobile network. Regional carriers worldwide. The total addressable market isn't measured in millions. It's measured in billions. Per year. But here's what most people miss. The carriers have every incentive to push this service aggressively. Why? Because coverage gaps are their biggest source of customer complaints and churn. They lose subscribers when calls drop. They lose subscribers when people can't get signal at their cabin or on their road trip. AST SpaceMobile solves their problem while creating a new revenue stream. That's not a hard sell. But wait, there's a better way to think about this investment. Forget the bull case for a moment. Let's talk about what could go wrong. Technology risk is real. Deploying massive satellites is incredibly difficult. SpaceX has lost rockets. Satellites have failed to deploy. One bad launch could set the timeline back by years. Regulatory risk exists in every country they want to operate. FCC approval in America doesn't mean automatic approval in Europe or Asia. Each jurisdiction has its own rules. And competition is coming. Apple announced satellite SOS features. T-Mobile partnered with SpaceX for their own direct-to-cell service. Amazon's Kuiper project has billions in funding. This isn't going to be a winner-take-all market. Multiple players will likely coexist. The honest assessment is this. ASTS is a speculative investment with real risks. But the asymmetric nature of the opportunity is what attracts investors. If they fail, you lose your investment. If they succeed, the upside is measured in multiples, not percentages. What the wealthy do instead is focus on position sizing. They don't bet the farm on any single speculative opportunity, no matter how compelling the story. The smart approach to ASTS is treating it as an asymmetric bet. A small allocation that won't devastate your portfolio if it goes to zero, but could meaningfully impact your returns if the thesis plays out. The key catalysts to watch are satellite launches, commercial service announcements, and quarterly partnership updates. Each successful launch de-risks the technology thesis. Each new carrier agreement de-risks the business model thesis. The timeline matters enormously here. 2025 is make or break. 5 satellites need to reach orbit and begin service. Revenue needs to start appearing on quarterly reports. The company needs to demonstrate that theoretical partnerships translate into actual dollars. That's the inflection point that separates speculative story stock from legitimate growth company. Let me put this in perspective. We've seen this pattern before with other transformative technologies. Tesla was written off as a joke for years before becoming one of the most valuable companies on Earth. Amazon lost money for over a decade while building infrastructure that would eventually dominate commerce.